I think relative to the gold price, on an enterprise value to net asset value basis, which is the right way to view it, or on a price earnings or price EBIT basis, that the gold stocks relative to current gold prices are the cheapest I've ever seen.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Well, it's a new year, and in just 2 weeks, a new American administration as well. What kind of impact will President-elect Trump's policies likely have on natural resources, the real things that power the global economy? To find out, we're fortunate to be joined by Rick Rule, one of the world's greatest living natural resource investors, and a heck of a gentleman to boot. Rick, thanks so much for joining us today.
A pleasure, Adam. I enjoy these sessions, so thank you for having me back.
Well, thank you, Rick. I enjoy them too, but I know that our audience enjoys them even more so. You're one of those folks that when it's been too long in between your appearances, the emails start coming fast and furious when you're getting Rick back on. So thank you for coming back on very early in the new year here. As I mentioned, new year and new administration. So there's a lot of questions I have about what may lie in store for natural resources. Before we get to the hard assets part of the discussion, though, if we can just start with the general question I'd like to kick these discussions off with, what's your current assessment of the global economy and financial markets?
Financial markets seem to be benefiting on a global basis from fairly easy credit and the attempts in major markets to artificially reduce the cost of capital. The interest rate cuts in the United States and a strong economy, I think, are indicative of the fact that governments continue to favor an easy money policy. While this is good for capital markets in the present, my suspicion is that we'll have to pay the piper with higher rates of inflation in the future. But I guess you should enjoy it while you can. I think one of the major things that we've seen with global capital markets in the last 2 months is investors on a global basis expressing continued confidence in the U.S. economy and anticipating, at least nominally, a stronger U.S. dollar relative to their own domestic occurrences and a major flow of funds from global capital markets in the United States. I'm really amazed at the durability of the global economy, given some challenges. It's been a very long time since we conspired to have a recession. I'm no economist, so I don't know that we need to have one, but I'm relieved that we've gone so long without a major economic disruption. I'm interested too that the conflict in Ukraine and the conflict in the Middle East, a spate of Islamist coups in Africa, haven't constrained investment demand and investment flows more than they have. I'm delighted, in fact, that there seems to be enough confidence in the world that despite some fairly obvious challenges, life goes on and people continue to prosper. That being said, I'm becoming perhaps even more cautious with my own money than I have been in recent past. And I've been fairly cautious in the recent past. I would guess that my final comment probably relates to investor psychology, which is to say that there seems to be a concentration of capital in the biggest momentum names, things like the US dollar, the largest and most liquid currency in the world, things like 10 or 12 stocks that dominate US capital markets. I'm not sure that this continued strength but reduced breadth is healthy, but nobody asked me anyway, Adam. So I just observe it and report on it.
Okay. If you don't mind, you mentioned that you're becoming more cautious with your own money. And you sort of mentioned that after ticking off a bunch of things that had surprised you on the upside. Oh, we haven't had a recession. Oh, global trade's been more resilient. What specifically is making you feel like it's time to become more cautious with your own money?
I don't know. Um, the observation has been that 6 months ago or 7 months ago, I had been very eager to redeploy the proceeds that I enjoyed from the sale of a developed real estate portfolio. I wanted to deploy the capital because I was concerned about making 4% on money where I believed that the purchasing power of that money was declining by 7.5%.
Hmm.
I've become less frantic about deploying that cash, partly because I've been successful in deploying some of it in prime rate linked loans rather than having it on deposit with banks or, heaven forbid, in long term debt, including US debt. But I'm also much more comfortable maintaining more liquidity than I used to. Perhaps I take comfort in the fact that the best capital allocator I've ever seen, Warren Buffett, seems to be doing precisely the right thing. He tells us it's not a strategy. He tells us that it is a tactic, given the fact that he can't find very many good things to invest in.
Hmm.
I wonder if, in this case, tactic and strategy isn't the same.
Hmm. Hmm. All right. Well, okay. So, to a certain extent, I kind of hear you saying um, a little bit of a gut feel, but you're not finding super compelling reasons for it. And uh, obviously, Buffett is one of the smartest, greatest investors of all time. Probably doesn't hurt to emulate him when you don't have a lot of confidence about where else to deploy the money. Um, okay, so I do want to talk a little bit more about your inflation expectations and things like that. But why don't we trundle over here? Thank you for the large overview of how you see the world in general. When you look at the world of natural resources, hard assets, what kind of year do you think 2025 is shaping up to be? What trends have your attention most? And then maybe after we talk about that, we can talk about where you see the greatest opportunity, if any.
Uh, there's a few things that interest me. One area where I am deploying, by the way, so is Buffett, is in the oil and gas business. The expectation for success in oil and gas is very low, and the probability of success in the oil and gas business is very high. The returns on capital employed are high. Some parts of the business are making enough investments in sustaining capital that their production can continue for 4 or 5 years at the current levels, meaning that this free cash flow generation can continue. And the price that you're paying for this reality is, in a historic sense, and relative to other industries, very, very, very high. So I'm attracted to that, and I continue to deploy in that space. I think that the perception in the market around inflation is one of confidence, which is to say that people believe that inflation will be low and is falling. I believe that's misplaced. You and I have talked before on your show about the fact that the CPI, from my point of view, doesn't measure the deterioration in the purchasing power
Hmm.
of our currency. And I believe that our currency is depreciating at more like 7.5% than it is at 2.5%. So I draw different conclusions than many investors draw. I hope I'm wrong. I think I'm right. By the way, I believe that the US dollar will continue to perform well against other currencies, which is to say, I expect it to be relatively strong, but absolutely weak. And we can talk about the reasons for that later in the interview. Suffice it to say, many of them have to do with the aggregate level of government debt and deficits.
Got it. And of course, let me just ask you. Well, okay, I'll save it till we talk about that. But obviously, one question I have is, do you think the new administration and the Department of Government Efficiency and all that stuff are going to make any real dent in the deficits, or are we just going to see the same amount of spending as we typically, have? I'm going to guess from your smirk that your optimism isn't super high, but we'll talk about that. Um, so sorry for a moment. So 2025, you basically said you think could be a good time for oil and gas. Um, I'm curious where in that industry or how that industry breaks down for you when you look at it from an optimistic investor standpoint. I've heard some people say, okay, if Trump actually unleashes a drill baby drill um, campaign, that that may actually bring the price of oil down, and that may hurt the producers. But then there's all sorts of other companies in the space that could still benefit from that. Do you think drill baby drill? Do you think drill baby drill is going to get unleashed the way in which Trump is talking about it? And if so, how does that ripple through the investment opportunities in the oil and gas space?
I don't think that the importance of the Trump election is Trump himself, but rather the fact that he represents the beginning of a change of sentiment among Americans, where less regulation, more prosperity, and
Hmm.
less narrative is important. I'm not sure that Trump himself will be able to affect very much legislative change around the oil and gas business. But the de facto opposition, evidenced by Biden to things like the construction of liquefaction plants or interstate transmission, is gone. And I think that's a good thing. But I think more importantly, it reflects a changing will among the American people around economic development and around resource development, which I think is healthy. One needs to understand that drill baby drill is a function of geology. We've drilled a lot of our good locations in the last
Hmm.
5 years. It's a function of energy prices. Lower energy prices turns off the drilling tap very quickly. It's a function of the cost of capital, and it's also a function of the march of technology, not to mention local regulation. One example that many people don't think about, and I only became aware of recently, has been the increasing problem in places like the Permian with the disposal of salt water. We're generating so much byproduct salt water that our ability to inject it into locations without damaging groundwater
Hmm.
or in fact creating seismic events is beginning to call into question the challenges, the mere challenges around saltwater disposal. Not something that we considered 2 years ago, but something that we have to consider, not from a narrative viewpoint, but from an actual environmental viewpoint. It's very nuanced. The thing that's particularly appropriate to talk about in terms of energy politics today, though, isn't the United States. Uh, the Prime Minister of Canada, a noted opponent of the oil and gas business, has decided to pursue other employment alternatives, which is a wonderful circumstance for the Canadian oil and gas industry. That Prime Minister, Monsieur Trudeau, decided that there was no business case for Canadian natural gas, despite the fact that the Alberta gas price for that was $2 Canadian per thousand, and the selling price for that same gas in Rotterdam or Shanghai was
Hmm.
$13.50 Canadian, taking say $2.50 or $3 Canadian to get there. Uh, Thanking and excusing Mr. Trudeau is over 5 years, I think, a game changer for the Canadian natural gas business and the Canadian heavy oil business. And the impact on the Canadian heavy oil business may be further benefited by Trump to the extent that access to the U.S. Gulf Coast refining market, uh, an area where there was substantial investment to process heavy, sour Venezuelan and Mexican crude, which they no longer can process, being able to match up with heavy, sour supply from Alberta because of the removal of political constraints in both the United States and Canada has the potential over the next while to be an absolute game changer
Okay.
for the Canadian oil and gas space. I think today's announcement are the harbinger of 5 very good years for Canada. Don't expect this to be reflected in the market in the next 10 days or 2 weeks. That's not the way the oil and gas business works.
Right.
It takes a year or 2 years or 3 years before a change in policy is reflected in the free cash flow of the producers. That notwithstanding, the biggest headwind that the Canadian oil and gas business faced has decided to pursue other employment opportunities.
So, there's similarities between that and here in America too, with the change from the Biden regime to the Trump regime. Um, and I have done some recent interviews with some other energy analysts who are saying, there's potential for a real renaissance, right? A real energy production renaissance, which then theoretically should also translate into an economic boom as well. But again, measured in years, not months. Um, and it sounds like you see potential for similar here. So I, I just want to go to the word great game changer. You said game changer for the Canadian oil and gas industry, but is it larger than that? If you take this trend of deregulation in US and its close trading partner Canada, um, so you're removing regulations. Presumably, you're also and this may be controversial amongst some listeners here, but I would say the kind of green energy constraints that have been placed on the fossil fuel industry may be getting removed, and we now have new technology, or not new technologies, but having technologies like nuclear, which was reviled for many decades, all of a sudden being considered an acceptable, a more acceptable energy source going forward. If folks begin to realize, hey, we've got all this cheap natural gas, let's start using more of it. Let's drill, baby, drill, and then let's start doing, you know, pipelines and revitalize the Keystone Pipeline. Let's start finding ways to get that cheap, untapped Canadian production capacity down here in America. I mean, it seems like one could really get excited about the next 5 years in totality, given these trends. Now, they won't be costless, but if you're measuring on the benchmarks of cheap energy and plentiful energy and economic growth, one could get pretty excited about that. Do you have that excitement?
I think one should. And I think that you don't need to be anti alternative energy or green energy to be excited about it. One could suggest that any reliable baseload power that doesn't generate carbon, aka nuclear, is green energy and a good
Hmm.
thing. And I think that we've begun to see a realization of that amongst people who were opposed to nuclear energy in the past. Had you and I had a discussion 5 years ago about the efficacy of nuclear power in the United States, we would have generated a lot of hate, even amongst your listeners. Uh, the administration has gone from hating us to subsidizing us in the Inflation Reduction Act. Now, I will admit I felt cleaner when I was hated, but being an old man, wanting change in my lifetime, being subsidized is in fact better than being hated. But it's
Right.
important to look too at a society that's made a decision around alternative energies, particularly in your home state, California.
Hmm.
Wind and solar, which is to say intermittent power, only works if you have the ability to generate power when the wind doesn't blow and the sun doesn't shine. And that peaking power is primarily natural gas oriented. So, to the extent that you're going to take the grid above 30% or 35% reliance on intermittent energy, the only way that you can do it in a way that guarantees energy when and where it's needed is by building substantial natural gas peaking generation and substantial natural gas storage and transmission. They go hand in hand. If you don't have the ability to offset the intermediate nature of transitional alternative energy, you don't have transitional alternative energy. That's a simple fact. Look at solar as an example. It's really challenged at night when the sun doesn't shine. You have to have the ability, if you're going to use solar power when it's available, to substitute some other form of intermittent power when solar is unavailable, and that is primarily natural gas. They go hand in hand. The United States and Canada are blessed because we have ample supplies of sun, we have ample supplies of wind, we have ample supplies of uranium, we have ample supplies of oil, we have ample supplies of gas. Relative to our economic activity, We are truly blessed. And to the extent that we build on our blessings, we will continue to outpace the rest of the world in terms of our material well-being, which I suspect almost everybody, almost I say, perhaps not the effete academic classes, but I think everybody else would like to see both themselves and their neighbors better off materially.
Okay. Yeah, it's interesting because you're sort of talking about earlier about sort of change in attitude, and I'm sort of detecting one in America at least, and I also believe in Canada too, especially now with today's news, right? And it seems, I'm not a political analyst, but it seems like the conservative candidate, Pierre Poilievre, is it has been winning, by a pretty wide margin in the polls, and so has a good chance of becoming the next prime minister of Canada when they hold the elections. And he is much more sort of a Trumpian approach to energy than obviously Trudeau did. So there's this sense amongst the populace, I think, that's growing of, hey, we have all these advantages, but we've kind of been tying both our hands behind our backs. And why don't we just actually take advantage of of these gifts that we have that you listed? Now, of course, the concerns on the other side of that is well, hey, we don't want to poison the environment or contribute
Correct.
to climate change, or in California where I live, I mean, there's an awful lot of untapped deposits out here, but people would say, well, the reason why people love California is because we have these beautiful coastlines. We don't have oil derricks just on every, square meter of California. So how do you think about balancing those two? Because I think most would agree, who aren't those ivory tower academics, would agree there's a lot more we could be doing that we aren't, and we've had regulation and all sorts of other political agendas that have kept us from really pursuing our advantages. But again, nobody wants to, rape their own backyards either.
Well, I think the first thing is that some of the obvious sins around the oil and gas business uh, need to be economically controlled. Every well that's drilled in the United States shouldn't be drilled until there's an environmental compliance bond in place, so that an environmental failing isn't paid for by the state, isn't paid for by the taxpayer. There are something like 400,000 uncapped abandoned wells in the United States, leaking, as an example, salt water and oil and gas from deeper horizons into freshwater horizons. That exists today. There is no requirement, even in the People's Republic of California, that before drilling a new well, you have to have an environmental bonding and an environmental and remediation bond in place, so that to the extent that there's a blowout, so that to the extent that the well ultimately needs to be cemented, plugged, and abandoned, that capital is put up in front, so that the bankruptcy of the operator, as an example, doesn't result in the transfer of liability to the state. Because when the transfer of liability goes to the state, uh, action doesn't occur. There are wells in California and wells in Texas that have been, uh, in effect, state obligations because of the bankruptcy of the operator for 20 or 25 years with no remedial action taking place. Remember, as an example, that the Federal Environmental Trust Fund is just that. It's a promise. It's an
Mhm.
entitlement. In other words, we have mandated the expenditure, but there's no money to spend, nor no political pardon me, to divert uh, money to plugging and abandonment in favor of more expedient domestic spending programs. So the first thing that has to happen is that the industry itself has to fund remediation, and they have to fund it up front. That doesn't take place today. Californians, however, have to remember the old maxim that used to be on bumper stickers in California. Quote, no drilling, no driving. Uh,
Right.
I would suspect that the Los Angeles and Ventura basins alone have 500 or 600 million barrels of recoverable oil that Governor Gruesome will not allow to be developed. The Stevens Formation in the San Joaquin Basin is estimated to have 500,000,000 barrels of what is currently unrecoverable oil. Even by California standards, it's a little self-serving to suggest that the environmental degradation should occur in West Texas, while the benefits of cheap oil, and you'll remember that Governor Newsom crucified the oil industry when the price went up. On the one hand, saying you can't drill, and on the other hand, saying the price of gasoline can't go up.
Right.
It's important that people accommodate both parts of that discussion.
Okay. And do you think, I'm just curious, this if you agree with me that there's sort of this shift in public sentiment going forward, which is, hey, maybe we've been a little bit too heavy-handed and we've been too self-limiting. Let's relax things a bit, hopefully smartly, and maybe using some of the examples you just mentioned there about the industry paying up front for the degradation. Um, but it seems like that's spreading across America, now potentially in Canada. Um, in a state like mine, right, famous for being a bastion of the other end of the spectrum, do you see the pendulum swinging back at some point? You know, it's probably not going to happen during the current governor's administration, but do you see the populace here following suit as well?
I don't know the answer to that. I'm tempted to extrapolate from my own personal experience. I was just in the People's Republic of California last week.
Right. Well, and you were from here originally, right?
I'm from there originally. The population base that I came into contact with over the last week, I wouldn't suggest would be particularly supportive of a less restrictive environment. There
Okay.
was not that I'm a Trump supporter, by the way. I couldn't bring myself to vote for either Harris or Trump, and they didn't have none of the above as a choice on the ballot. But there was widespread gloom over the election of Trump, um, widespread criticism when they criticized the president-elect, and I agreed with most of their criticisms. When I asked him why they couldn't nominate somebody who could beat somebody like that, they seemed to be at a loss. And so I suspect that at least in the part of California that I dealt in, there was a sort of a disconnect between some aspects of what they would like to see in society and how that might occur. But it's dangerous to try to extrapolate, your own anecdotal experience with reality.
Right, right. And I mean, living, so I live here, and yes, it's not like I don't see perception shifting here in real time that much. Although, it's interesting. I have seen this presidential election cycle very different, the vibe in the Bay Area, Silicon Valley, where, two elections, even the previous election cycle, but certainly several before, if you lived in Silicon Valley and you mentioned Trump had some, interesting ideas, you would have gotten crucified. Where now there's actually a pretty sizable vocal contingent of Silicon Valley that has broken away from the traditional progressive ranks. And again, look, I'm no
Yep.
political analyst. I'm just telling you what I see from the cheap seats. But what is interesting is even with Governor Newsom, or Governor Gruesome, as you call him, the Diablo Canyon, if I'm getting this right, that's the nuclear
Yes.
facility that was set to be decommissioned, that they ended up extending its lifetime. And to me, that is maybe an early sign of the pendulum shifting, which is where, nuclear energy was sort of reviled here. And then it was, well, actually, we kind of need this stuff, and maybe it's actually greener than we think in the long, in the big scope of things. And to see that happen in California was definitely an eye opener.
And I think Governor Gruesome, for all his faults, uh, has very good political antenna. The recent statements from the governor about the state of policing in Oakland, which is a manifestation of his own political beliefs, where he became critical of defunding of the Oakland Police Department and the constraints that the Oakland Police Department operates under, reflects his perception of a changing sentiment. Because certainly the political base that he comes from, the sort of Bay Area progressive mafia, isn't consistent with changing his views around nuclear power or his changing around policing. However, I think he's a superb campaigner. I think he has superb political instincts. Like most politicians, I suspect he's lying when his lips are moving. But if you
But
listen,
he can detect a change in the political winds faster than any other human.
absolutely, absolutely. I mean, I think he's in line to be rewarded for wrecking California by being nominated to run for president. Truly a strange world, but he's a superb politician.
Okay. Well, look, I apologize. I didn't mean to get too mired in the political side of things, but I think it's important because as someone I just interviewed said on the energy side of things, it's a lot easier to remove a political constraint than it is a geological one, right?
Yeah, that's important. And I think going back to energy, that people who are looking at U.S. production need to understand that there are several important constraints. One of them is political, which can be dealt with. Another is geology. The suggestion at $70 oil that we've drilled 75 or 80% of our tier one locations is probably true. Our ability to continue to grow our production after 2 or 3 years is probably becoming constrained depending on price. But if you take the price from $70 to $85, a bunch of tier two locations become tier one locations.
Yep.
Or if you lower the cost of capital, uh, so that the prime interest rate falls by 200 basis points because this is a capital intensive business, then tier two locations become tier one locations. Or if you change technology to allow for better extraction of tight reserves or lower cost of penetration and drilling. In other words, if you lower the cost of exploiting resources, again, tier two locations become tier one locations. If technology doesn't change, if the cost of capital doesn't change, and if the price doesn't change, I think that we are approaching a plateau, a producing plateau in most of the major basins in the U.S., with the probable exception of the Marcellus in the U.S. Northeast.
Okay. And this goes back to our previous discussions where you've said, look, even if demand stays flat, we have some sins of the past that are going to be catching up with us in terms of lack of capital expenditure, right? So there is that. Now, you mentioned a couple of factors. Let me tug at a few of them. Let me start with the cost of capital. So interestingly, the Fed has started cutting the interest rates, trying to end the era of higher for longer interest rates. TBD whether it's going to be able to do that on the timeline it wants to. It's already sort of signaling it's going to have to slow its roll a bit because inflation has been stickier than the Fed would like. But the Fed is still projecting confidence that, don't worry, we got this under control. We just need a little more time. But if you look at the longer end of the yield curve, yields are actually higher than they were when the Fed started cutting rates. And it's the longer end of the yield curve that matters to investment in natural resources, right? It's the longer end of the yield curve. That's where the cost, where the borrowing costs that the companies have to take on is set. So how concerned are you that the cost of capital may become an increasing constraint if it can't come back down the way that the Fed and other players are hoping?
Increasingly concerned, with the caveat that I'm the supplier of capital. So expensive capital is beneficial for me, although not for
Personally
the industry.
beneficial to your lending, yeah.
Listen, you pointed out a couple things. The long end of the yield curve is defying the Fed, which means that savers have a different expectation of inflation than the political class does.
Mhm.
The second thing that's happening is that the delta between the energy industry's cost of capital and the rest of the economy's cost of capital is changing. Out of favor, oil and gas is still an out of favor industry. So insurance rates are going up, interest rates, particularly for non-investment grade issuers, but also prime rate issuers, is going up, and availability is declining. And the equity cost of capital is going up. The discrepancy between the enterprise value of energy producers and the net present value of their cash flows at current commodity prices is at historic lows. So their equity cost of capital is the highest it's been in 50 years,
Hmm.
relative to the oil price, at the same time that debt is both less available and more expensive. And that will be a challenge to the industry. For me personally, as an investor, a lender to the energy business, a supplier of insurance to the energy business, and an equity investor in the energy business, the fact that their cost of capital is at an all-time relative high is attractive to me. But I can understand from a societal point of view uh, how energy consumers wouldn't like that.
Yeah. Okay. But basically you have the concern that if there's not relief on cost of capital in the next year or two, it's going to act as an increasing drag on production, future production.
It already is. Not so much in the U.S., but globally, the International Energy Agency suggests that the oil and gas business worldwide, including parastatal firms, is deferring about $1 billion a day in sustaining capital investments. You can do that for a little while, but this is a capital intensive business. No capital,
Business.
no business. You can see the long term impact of that policy in places like Venezuela and Mexico, where the national oil companies have been piggy banks for politically expedient domestic spending programs, and where their ability to produce is as much as 75% reduced over 20 years,
Jeez.
despite very large latent reserves.
Um, all right. Well, this I want to revisit something we talked about here, but it's related to what you just touched on, which is so obviously someone like you, I'm sure, looks at a place like Venezuela and just says, "Oh my gosh, if they just made me, Tsar of Venezuela, man, I could do a much better job, right?" All this great potential that's just being completely mismanaged right now. Um, if we unleash this wave of deregulation, and let capitalism, free capitalism thrive, at least much more so in our own domestic energy space, and Canada does so at the same time. Um, there simple-minded folks like myself think, okay, well that could be great because it actually could increase production and it could potentially bring down the cost of energy and drive the economy. Um, I guess I've got two or three questions here, but let me start with this one. And forgive me if these are all, you know, uh, too simplistic. Um, Canada right now, lots of untapped potential, as you said earlier. Could we get to a point where the cost of production in Canada is materially cheaper on average than it is here in the US, and rather than uh, continue to rather than more aggressively invest here, we just buy on the cheap from our neighbor?
That will take some time because our infrastructure is so much more developed. We've done an amazing job in the United States, not just in terms of drilling wells and implementing technology, but also building gas storage, oil storage, transmission facilities, process facilities, liquefied natural gas facilities. It'll take the Canadians a substantial time to recover from the Trudeau era in terms of the infrastructure advantages that the infrastructure investments that they will need to make to change their latent wealth into actual wealth. I think the other thing that investors need to understand is that the benefits to society over this have an awful lot to do with avoiding future catastrophe. Putting in place the production infrastructure now makes us much less dependent, as an example, on Middle Eastern oil.
Right.
Let's say, as an example, that the confrontations in the Middle East escalate to the point where Iran chooses to close the Straits of Hormuz, where 60% of the world's export oil transits. North America has the ability, because of the United States, Canada, and Mexico, to largely absent themselves from the shock that would produce. And an awful lot of the development of energy infrastructure in North America has to do with the so far intangible benefit that we would enjoy from having ample supplies and even redundant supplies in a world that is, by some measures, increasingly hostile and is certainly increasingly competitive and nationalistic.
Well, so on that, I've heard people speculate that, hey, that's the Trump playbook right there, in the big picture, which is sort of a Monroe Doctrine, like let's take advantage of our great advantages that you mentioned earlier. Let's help our big partners like Canada do the same. Let's, you know, continue to really invest in the oil-rich countries in South America and, you know, become an even bigger partner and protector of theirs. And, you know, make ourselves a lot more self-sufficient as a hemisphere. And then to your point about if we can get redundant supplies, then send those out to the rest of the world so that A, we're not buying as much from, we're not as dependent on all these other foreign players that you were talking about. But if we kind of flood the market with our cheap energy prices, we kind of really weaken the biggest you know, adversaries of us on the geopolitical stage. What do you think about that? Is that just a
I,
fairy tale, or do you think that's actually the plan?
I hope it isn't the way we're thinking. I don't suspect that Trump actually has a plan. I suspect his plan was to gain power. He's a transactional guy and impose his will. And I don't think that he has a geostrategic plan that is in the order of magnitude of anything that you suggest. I hope too that whatever policies that we implement them, and this is going to make me sound like a Californian, for the good of humanity.
Hmm.
I don't have any particular interest in impoverishing nations that export oil and gas. What I have an interest in is making sure that all of humanity, but in particular that part of humanity which touches me, lives as well as they can in the circumstances that they enjoy. I'm not sure in the United States that we need to increase our production, but I do think that we need to increase our productive capacity so that to the extent that there was a precipitous decline in production from elsewhere, or to the extent that more emerging markets nations urbanize the way China did, and there's more demand for
Right,
energy
and can afford it. Yeah.
from
Yep.
third parties and can afford to compete for us, that we can deal with that competition in a way that doesn't unreasonably impact our own material well-being.
Okay. And you know, we've talked many times in the past about your kind of Rick Rule's high level view of the world, and that you're most optimistic on humanity. And that's both from uh, you know, somebody who wishes the best for humanity, but it's also as an investor, you see that's one of the best
Adam,
investments to make, right?
you live in the microcosm of this, Adam, in the Bay Area. I
Hmm.
mean, a group of 5 or 6 kids can commandeer a garage in Sunnyvale, and out pops Hewlett Packard or Apple or Google or Facebook. Astonishing, absolutely astonishing. Our individual initiative, but particularly in Silicon Valley, has been so fantastic that it's financed our collective stupidity. In a war between Jobs and Newsom, Jobs won, despite the fact that there's more Newsoms than there are Jobs. I mean, I'm really optimistic about the future of humankind simply because the upside around our own individual initiative and creativity is even greater than our collective stupidity. I mean, it's a hell of a war, but thus far we're winning.
All right,
And
but
there's no place better to observe that than Silicon Valley.
Silicon Valley. I think it's a great analogy, and as I sort of again apply it to your worldview, you know, America should do what it needs to do to keep its advantage and take care of its own, but it should also be a leader in the world in basically catalyzing that type of innovation and
Correct.
you know, game changingness for all humanity. Yeah.
Correct.
Okay. All right. Well, look, we've talked about this a little bit, but I want to get to sort of where you see the biggest opportunity investors. And you started all this whole conversation by saying, you know, you're looking at oil and gas and thinking, hey, that this could actually, you know, we could have a new renaissance ahead of us here. Um, and I saw a quote from a recent interview you gave where you said that you recommended oil and gas for investors, I think for many of the reasons we just talked about, but gold stocks for speculators. Is that still true?
Yeah, gold itself for savers. I regard gold as insurance. We probably don't have enough time in this interview to go over that, but I think that anybody who doesn't own physical gold, well, I won't insult them. I just believe that everybody should own physical gold. The dichotomy between, like oil and gas, the enterprise value of the best gold producers and the gold price is at historic lows. And if the gold price continues to do what I think it will do, which is to say go up, the gold producers will enjoy a catch up. So investors need to be in the space. The biggest moves, of course, will be in the alpha part, the speculation. That's not suitable for everybody. That's only suitable for people who can stomach volatility, accept real risk, and do a lot of work. But I think that gold as a sector is unique in that it warrants a lot of attention for savers, for investors, and for speculators, which are three different classes of human being.
Hmm.
Uh, I mean, I really think it's a simple thesis, and it's a thesis that, when it plays out, generates spectacular benefits. You know, Adam, I'm not one of those who suggests that you buy gold because it might go from $2,700 to $3,000. I'm one who suggests that you buy gold because I remember the decade of the 70s or the decade 2000 to 2010. In the first instance, the gold price went up 30-fold. In the second instance, the price of gold only went up 7-fold, which is to say, I don't buy it because I think I might enjoy a 15% move. I buy it because I'm afraid of a 3 or 4-fold move, literally afraid of
Hmm.
a 3 or 4-fold move. In the investment side of the business, I buy it because it is historically, by it now, I mean investment quality gold stocks, they are historically cheap. And if I'm right about the gold price, I'm really, really, really right about the senior producers.
All right, and let me quickly just ask you about this so you can integrate it in your answer. So you're what I'm hearing from you is, look, gold you think has a good prospects ahead of it in terms of price appreciation, just the metal itself. And
Yep.
this is for the saver, the conservative. Everybody should have at least some exposure to it. For investors, you're saying, look, gold in the ground is on sale right now, relative to history. You've had a long career in this space, Rick. What's the extent of the discount you see right now versus other times in your career? Is it one of the most extremes? Is it kind of in the middle? Where are we?
I think relative to the gold price, on an enterprise value to net asset value basis, which is the right way to view it, or on a price earnings or price EBIT basis, that the gold stocks relative to current gold prices are the cheapest I've ever seen.
Whoa. Okay, that's a big statement.
And the high quality speculative stocks, by the way, most speculative stocks are not high quality. I'm talking about 10% of the speculative stocks. They're even cheaper. Uh, that isn't an arena to go into if you can't take volatility risk and do work. But I think it's one to consider at any rate. I need to preface that, Adam. We've tried to do it
Mhm.
earlier, but I need to preface it by saying that I don't believe the inflation statistics that we're fed.
Right.
Anybody who's listening to this, all they need to do is think about the increase in rent, in home mortgages, in car pricing, in health insurance, in gasoline, in groceries, in the period 2020 to 2024. And the idea that the purchasing power of your currency is declining at 2.5% a year is ludicrous.
Yeah. Honestly, Rick,
Ab-
I don't think any viewer is going to challenge you on that. I think they're already there, preaching to the choir.
it's just astonishing to me. And if you look at the on and off balance sheet liabilities of the US government and their ability to do anything about that other than inflate away the net present value of their obligations,
Hmm.
I think the chance of that is nil. If you look at those two circumstances and you still own long term US treasuries in favor of gold, it's because you flunked arithmetic in school.
Right. Well, you can't be any more direct than that. All right. So I I just want to tie some things together here. So it sounds like you say, hey, look, everybody, like, look, if you don't own some gold, you should really think about owning some of the physical gold. If you like it, maybe you might even want to look at increasing your allocations going forward. If you're an investor and looking for good opportunity, the general sector looks pretty good. Look at the big names, and you've rattled those off before. In the conference appearances you've been, but we're talking about the Wheaton Preciouses, the Franco Nevadas, the Agnico Eagles, et
Yep.
cetera. And I've heard you say, look, there's enough upside in just those great big names that you can kind of get the best risk reward, profile off of them. You don't have to risk it all on the
Correct.
tiny little guys, right? That might be lottery tickets, but many of them are definitely not going to be. Obviously, if you want to get more speculative than that, you don't want to be reckless. So where I'm going here is that at your company, Rule Investment Media, you guys produce a number of ongoing events around these particular opportunities that you see in sectors, whether it's uranium, whether it's whatever. You've got a boot camp coming up soon as well, I believe focused on this space, correct?
This Saturday, we're doing an 8-hour long uh, web hosted symposium on gold. We call them boot camps. In our boot camps, we do a very deep dive on one subject around natural resource investing. Our audience has told us that this time they want to do gold, so we're going to do gold. If you're a tourist, which is to say, if you buy the newspaper so you can read the funnies or do the crosswords, don't come. This is going to be very dense. It's going to be 8 hours long, and we're going to give you so much information in 8 hours that you can't absorb it. So you're going to have to replay the tapes probably a couple times. If you really care about gold, if you really care about gold investing, if you really care about speculation, if you really care about the maintenance of the purchasing power of your savings and investment, and you're prepared to work, this is a great place to come. By the way, Adam, you know this, your audience won't. In every educational product I've sold for 28 years, it's come with a full money back guarantee. If you attend the boot camp or if you attend my symposium and you think you didn't get your money's worth, I'll absolutely positively refund your money. I can't give you back 8 hours of your life. So only come if you care enough about the topic to work.
All right. Much better said than I could say. I will, one, folks, underscore, if you're interested in the subject matter, these are highly valuable experiences. And just to put it in a nutshell, look, if you're just conservative and just want to play it safe, get yourself some gold. If you want to get some exposure to the space, but not really have to think about it, look at the big names that Rick has mentioned in past appearances on this channel. But if you really want to construct a portfolio to take advantage of the opportunity here, and I didn't know this before Rick came on today, at a time where gold in the ground is potentially at the greatest discount it has been in Rick Rule's long and prodigious investing career, and you really want to try to find, what's the best way to pick the best diamonds, out of all the rough there. These boot camps are it's the best educational opportunity I know of to really delve deeply into this and get very actionable direction on this, and empowering yourself as an individual investor to build a portfolio around this. So, Rick, I reached out to your team to get a link for the boot camp that's coming up this weekend. It's a pretty long link, so I created a redirect. Folks, if you just go to thoughtfulmoney.com/rule bootcamp, it'll redirect you to that gold bootcamp page to tell you all about the event. And if you want to sign up, you can do it there. So that's the boot camp. Rick, you very briefly mentioned your symposium, which is coming up this summer. That's really like your big annual kind of big macro event, your big tent event. Do you want to tell folks a little bit about that?
Love to. Every year for 28 years now, we've put on a natural resources investment symposium. After 28 years of making a little bit better every year, I think humbly that this is the best natural resources investment event in the world. You can attend live, 4.5 hard days in Boca Raton, Florida, or you can attend from the comfort and convenience of your own home via live stream. In either case, you have access to the conference recordings for a year, and you're going to need them. We're going to give you 55 hours of programming over four
Yes.
and a half days, more than you can possibly absorb. I put on the conference. I select the speakers. I debrief the speakers, and I have to play the tapes. The idea that you can get away with it without doing it is a non-starter. But if you care about natural resource investing, this is absolutely invaluable. Once again, whether you attend live or via live stream, there's an absolute gold-plated money-back guarantee. If you don't think that I earned your tuition, email me and I will give your tuition back. I'm delighted to say in 28 years of providing investment educational product that I've had to refund less than 1/10 of 1% of the tuitions I've charged. But my guarantee to you is if I fail, I pay.
All right, and I know from when you've mentioned this in the past that 1/10 of 1% asked for the refund, not because they didn't find value in it. It was, this is so dense, I just don't have time to make it through it all. Well, like I said in the intro, Rick, you are one heck of a gentleman to boot, and your personal guarantee is just additional validation of that. Folks, similarly, there's a pretty long URL for the symposium, so I created a redirect for that as well. Go to thoughtfulmoney.com/rule symposium. I'll also have links to both of those, that and the bootcamp, in the description below this video, so you can just get there with one click. But really can't recommend either highly enough. And again, if you are looking to increase your exposure to gold in 2025, right here at the beginning of the year, make sure you go attend this weekend's boot camp, or if you can't attend live, register for it and then watch the hours and hours of videos afterwards. Rick, my friend, again, it's always just such a joy to interview you. Thank you for being so generous with all of your expertise and your time. Is there anything else that's on your radar right now that I haven't asked you about yet that's worth mentioning to folks here before we conclude?
Well, two things. One, congratulations for the incredible growth of Thoughtful Money.
Ah, you're so kind.
That's been great to see. You've deserved it. You've deserved it because you've served a market. I try to serve a market too. Any of your listeners who care what I have to say about natural resources can personalize it. Go to my website, ruleinvestmentmedia.com, list your natural resource stocks, and for no obligation, no charge, I will personally evaluate them, 1 to 10, 1 being best, 10 being worst. If I have comments that I think are of value on any individual issue, I will make them. Once again, Rule Investment Media, list your natural resource stocks. Please, no crypto. I'm not from Silicon Valley. No tech stocks, no pot stocks. Leave an old man to do what he does best. Rule Investment Media, list your natural resource stocks. I'll rank them.
I don't know how you have the capacity in your very busy life to do that, Rick, but God bless you for doing it. And folks, I avail myself of this as well. I literally just reached out to Rick the other day about a particular company. So he's a man of his word. I'll conclude here too by mentioning, Rick, I don't know if you're familiar with Fred Hickey, publisher of, what is it, High Tech Strategist?
Yep.
Um, so this has been a leading high-tech newsletter since the early 80s. I mean, Fred's been publishing it for a very long time, and totally separate topic. He has been pretty bearish on the AI, the big AI stocks. He thinks that they're too far overvalued and there's a correction coming. Different discussion for a different day. But when I talked to Fred, the thing that he is most interested about is gold and the gold mining stocks. And the fact that you've got a guy who was, dyed in the wool, Silicon Valley tech guy, whose attention is really focused on the gold sector, I think speaks volumes.
Fred is a very interesting guy in that he's a generalist investor, and as you say, a tech investor, a guy that's lived in a hothouse environment for 40 years.
Mm-hmm.
But he's always been somebody who has expressed interests in out of favor markets. I've enjoyed knowing Fred and reading his stuff for damn near 40 years.
Yeah,
And
been at a
so
long time.
I repeat your praise of what he says, and I'm delighted that he and his listeners will avail himself of what I think is a pretty good opportunity.
All right. Well, Rick, can't thank you enough, my friends. Folks, if you've really enjoyed having Rick on the program, I'd like to thank him for coming on and encourage him to come back on again in Q1 when he's got an update to provide us. Let him know that by hitting the like button, then clicking on the subscribe button below. Again, if you want, if you're a DIY investor, you want, the best guidance out there for investing in the natural resources spaces, go attend Rick's boot camp, and then if you can, his symposium in the summer. If you're somebody who might want some help, and if you are a first timer to this space, I would definitely say before you just start picking, um, gold stocks willy-nilly, it's a quite volatile sector, as Rick would be the first one to tell you. Um, highly recommend you get some guidance from a good professional financial advisor who knows how to invest in this space, can have the discussion with you. How much of a percentage of your portfolio does it make sense to put in this sector? If there's hedging that you might want to do that might make sense, they can help you with that. If you've got a good professional financial advisor who can help you with that, great, stick with them. But if you don't and would like help from one who does, consider scheduling a free consultation with one of the financial advisors you see here on this channel with me every week here at Thoughtful Money. To do that, just go to thoughtfulmoney.com, fill out the short form there. The firms will be out in touch with you likely in a matter of hours. And again, these consultations are totally free. There's no obligation to work with them. It's just a free public service they offer to try to help people out. With that being said, again, folks, don't forget to sign up for Rick's boot camp this weekend. Rick, my friend, have yourself the absolute best of New Year's, and I can't wait to see you this weekend.
Always a pleasure, sir. Thank you.
All right, everybody else, thanks so much for watching.